Welcome to the Deep Dive, where we break down the raw data, the transcripts, everything from the biggest market events, and give you the distilled knowledge you need. Today, we are deep diving into the story of Akamai Technologies. That's ticker AKM. And we're looking at their Q3 2025 results that dropped after the market closed on November 6th.
And this really wasn't just another earnings report. For Akamai, this quarter was a massive validation point. They're in the middle of this huge strategic transformation. For years, everyone knew them for their legacy content delivery network, their CDN, which is, a pretty low growth business. Now they are pivoting and pivoting hard into high growth security and cloud infrastructure.
And the market reaction tells that whole story, doesn't it?
It absolutely does. That highly enthusiastic reaction, that huge surge in the stock price, it tells you this pivot is finally delivering real proof.
That's the key word, proof. The response was immediate. Shares jumped almost 7% in after-hours trading, and then closed the next day nearly 15% higher. You just don't see moves like that without a real fundamental shift in how people see a company.
Exactly. So let's start with the top-line numbers that drove that excitement. Revenue came in at $1.055 billion, which, it slightly beat the consensus of around $1.04 billion. So that's 5% year-over-year growth, 4% in constant currency. Modest, but steady.
But that's not what grabbed the headlines. The real engine here, the thing that made the stock jump, it was all about profitability. Non-GAAP EPS, that's earnings per share, hit a remarkable $1.86.
Yeah, and that just blew past the 164 consensus estimate.
A 22-cent beat. That's huge. And it translates to, 17% year-over-year growth?
It's impressive. And whenever you see a huge earnings beat with just a modest revenue beat, you have to ask about the quality, right?
Right. Is it real? Or just some financial engineering?
Exactly. But in this case, the earnings quality was genuinely high. The non-GAAP operating margin improved to around 31%. And this wasn't just, broad cost cutting. It was driven by a favorable mix shift. More of their revenue is coming from those higher margin security and compute products. It's a signal that the new business model is actually working and delivering right now.
Okay, so that strong margin is the proof the pivot is working. So let's go segment by segment. Let's look under the hood and see where that acceleration is coming from, because that's what the market is now betting on.
For sure. And the primary engine is what Akamai calls Cloud Infrastructure Services, or CIS. Just to be clear, CIS is their infrastructure as a service cloud. It's focused on high-performance compute, edge services. It's totally separate from their old CDN business.
And what were the numbers there?
Revenue was $81 million for the quarter. And look, $81 million might sound small for a billion-dollar company, but the market cares about the rate of that growth.
Then it's accelerating.
It is absolutely accelerating. CIS revenue grew a whopping 39% year over year. That is a big step up from the roughly 30% they posted in Q2. Management is so confident they're guiding for CIS annual recurring revenue growth to hit 40 to 45% by the end of this year.
Wow. Okay, so that's engine number one. What's the other half of this growth story? Security. That's always been a strong point for them, but what did the details look like?
Security is so critical because it's high margin and it's very, very sticky. Revenue from their high growth products, so that's API security and zero trust tools, that hit $77 million, growing 35% year over year.
And that API security piece is where the demand is just exploding, right?
It is. Management even said they expect API security alone will exit 2025 at a $100 million annual run rate.
$100 million from just one product line. That shows you how much traction they have. So what about the total security picture?
Overall, security generated $568 million, which was a solid 10% year-over-year increase. It's their biggest segment, it's their most profitable, and it gives them the stability they need while these new services scale up.
Okay, now we have to talk about the legacy business, the elephant in the room that's been holding them back. The market reacted so strongly because the good news finally outweighed this drag, but the drag is still there.
It is. The traditional content delivery segment delivery, that's what most people still think of as Akamai. Revenue there was $306 million, which was a decline of 4% year over year. Now, a 4% decline is still a headwind, but management pointed out this is actually better than they expected, and the trend is improving. The goal here isn't growth, it's just to manage a profitable decline.
Got it. And then there was that timing issue in compute. Total compute revenue grew 8% to $180 million, which on the surface sounds good, but management kind of flagged it as being a little light. What do they mean by timing issues with large contracts?
Yeah, that's a really important question because it points to execution risk. When you sign these massive infrastructure contracts, we're talking multi-million-dollar deals, the revenue doesn't all hit at once. It ramps up over time. And management basically said that a few large deals they thought would start ramping in Q3 got pushed slightly. So that revenue now starts flowing in Q4 and really accelerates into 2026.
It's not a loss of business, just a delay.
Exactly. It's not a demand problem, but it does make the numbers a bit lumpy, and it means investors have to trust that the revenue will show up next quarter.
That makes sense. Okay, let's pivot now to the really forward-looking stuff that changed the whole narrative for analysts, the huge move into AI and edge computing. This is all about the Akamai Inference Cloud.
This is the big one. This is where Akamai goes from being, a reliable utility to a key player in the next generation of cloud. Their core strength is that globally distributed edge architecture. They have over 4,000 points of presence, or POPs, around the world.
Little tiny data centers, basically.
Little tiny data centers, exactly, close to the end users. And that distribution is everything for AI.
Why is that? Why is it so crucial?
Because when we talk about AI, there's training the model, and then there's using the model that's called inference. Training needs massive centralized data centers, think AWS, Azure. But inference, running the model in real time, that's the new frontier, as the CEO put it, and it demands extremely low latency, sub 100 milliseconds.
So you can't have the data traveling halfway across the world and back if you need an instant response.
Exactly, you can't. And Akamai's 4,000 POPs are already physically there to deliver that. Their big announcement was combining that edge fabric with NVIDIA AI infrastructure, starting in 17+ locations. And that NVIDIA partnership is a massive validation.
And this isn't just a theory. They're landing major contracts. They said all three big U.S. cloud providers now use their CIS platform. That's a huge endorsement. It proves their platform is this critical neutral layer that even their biggest potential competitors have to use.
And beyond the hyperscalers, they announced some stunning customer wins. A $37 million renewal with a global gaming company, and at the same time, a $31 million commitment from a major European bank for both security and compute. These deals show they are successfully cross-selling the new stuff into their massive existing customer base.
And looking at the financials that support all this, free cash flow was robust, right? Around $247 million.
Very robust, which allows them to make these big investments. And their geographic strength is another key point. International revenue hit $525 million, growing at 9%. That outpaced the U.S., which is only up 1%. It shows these new offerings are gaining traction everywhere, especially in Asia Pacific.
Okay, but we have to address the spending, the CapEx. It was high in Q3, $224 million, or 21% of revenue. That's a big number.
It is, but it's what you'd call good cholesterol. It's a necessary strategic spend. That CapEx is going directly into scaling the CIS business and building out that new inference cloud, securing the NVIDIA gear. They're deliberately sacrificing some short-term margin for long-term growth, and to capture this massive opportunity, they have to spend it now.
So bringing it all together, why does this one quarter matter so much to an investor right now?
It matters because of the guidance. Management raised their full year 2025 non-GAAP EPS guidance pretty significantly to a range of $6.93 to $7.13. That's about a 5% raise at the midpoint. Raising guidance like that signals real confidence from the executive team that this transformation is sustainable.
And it feels like the whole narrative around the stock has just flipped. Before this quarter, there was still a lot of anxiety about the legacy CDN business declining. Analysts are now calling this the ultimate credibility win. The market is no longer seeing ACAM as a slow growth utility. It's now being viewed as a potential re-rating candidate.
And that fits perfectly with the macro trend. We're seeing this rotation of capital away from the AI chip producers who've had an incredible run and toward the application and security companies that actually benefit from AI. Akamai is positioned perfectly for that shift. I mean, they're seeing something like 300% year-over-year growth in AI bot traffic, which directly drives demand for their security tools.
But it's not a slam dunk. Not everyone's convinced. There's still a split between the bulls and the skeptics. Where's the risk?
Well, the bulls are looking at the future. They see the margin expansion, the free cash flow, the huge AI edge optionality, and they think the stock is deeply undervalued.
And the skeptics.
The skeptics, who are, always a necessary check, they point out that overall revenue growth is still only 5%, which is modest compared to some pure play security peers growing at 30% plus. And they're worried about that contract timing risk in compute. Those large deals absolutely have to materialize in 2026 to justify this new higher valuation. It's a classic show me the money situation.
Right, so Q3 was a huge win, but the real execution test is still ahead.
Absolutely. And with that context set, we have to issue our mandatory disclaimer before we go any further. This is not financial advice. The hosts of this deep dive are summarizing third-party source material and discussing potential scenarios. We are not investment professionals, and nothing discussed here should be construed as a recommendation to buy, sell, or hold any security. Please consult a registered investment advisor before making any financial decisions.
All right, now that that's covered, let's put on our most aggressive hedge fund analyst hats. The stock is already up 15%. Where's the real alpha from here? We need an outrageous but plausible trade idea.
Okay, let's hear the high conviction bet.
Trade idea. Long Akamai, so ACAM, via long-dated call options, what they call LEAP ES, targeting the high-end analyst price target of $134.
Okay, AAPS. So you're not betting on next quarter, you're betting on a structural change over the next couple of years. That's an aggressive target. What's the core rationale?
The rationale is that the market just priced in the beginning of the shift. That 15% pop was just the catch-up. The real alpha, the real money, comes from betting that those huge transformative inference deals, the $50 to $100 million contracts that management hinted were in the pipeline. You bet that those start landing in Q4 and into 2026, and that they accelerate CIS growth past that 45% target.
So you're betting the AI opportunity is even bigger than what's priced in now.
Precisely. If that happens, the entire growth profile of Akamai changes overnight. It goes from a 5% overall grower to a high double-digit grower. And that justifies a massive multiple expansion, closing the gap with those high-growth security peers. This trade is a pure bet on the scale of the AI edge in management's ability to land the whale contracts.
It definitely focuses the mind on where that value inflection point is. It's all about 2026.
So to wrap up our deep dive, Q3 2025 gave us definitive proof of execution on Akamai's big pivot. It was anchored by that accelerating growth in CIS and, of course, the huge strategic launch of the Akamai Inference Cloud with NVIDIA.
And the essential takeaway for you, the listener, really comes down to physics and geography. Akamai's reliability and its unique footprint, those 4,000 plus POPs, that creates a low latency edge fabric that is just inherently difficult for anyone, even the hyperscalers, to replicate. The real question for you to explore is just how fast that AI inference market will grow, and can Akamai really hold on to its unique neutral edge leadership position as demand for real-time AI just explodes globally?
That is a powerful question, and it really defines the next era of the cloud. Thanks for joining us for this deep dive. We'll see you on the next one.